Hello and welcome to an episode of Monday Markets. As always, we are brought to you by Woo. Links available in the description below. Normally we'd focus on TA, and we will, but this is a pretty strange time to be making an episode, specifically because the ETFs aren't trading today. It's a public holiday in the US, and so we've had some very crypto-native price action, if you will. Now, the reason that comes with a boatload of disclaimers is because when the ETFs were trading, we sold off on the news, and then on this day, Coinbase was just getting absolutely hammered compared to all other exchanges. There was a ton of spot supply hitting the market and dragging the market lower, and there's plenty of speculation that was coming from GBTC essentially being redeemable compared to previous times where there was no redemption mechanism, and or if you wanted to sell your shares, they were trading at a massive discount to the spot price of BTC itself. Whereas now, the price of BTC is higher, and finally with the ETF approval, you could get out of GBTC and get a cash equivalent that actually correlated well and tracked BTC accurately, and or just transfer your funds essentially to another ETF product that was cheaper and didn't have you stuck in some illiquid product for years and years. Now, to what extent that's true, it's very hard to tell. I think at least part of the reason the discount was so massive on GBTC was because we got a lot of the distress selling out of the way. But what's more important than the exact mechanism for the spot selling is whether the spot selling continues. And again, tracking this turns into a bit of a quagmire because Coinbase is the custodian for so many of these ETFs, I think most of them in fact. So looking at inflows and outflows there may not be super helpful. There's also a ton of technical complexity when it comes to the settlement of these ETFs with Coinbase as the custodian and sort of market making, arbitrage related, cash in kind redemption nonsense that makes it tricky. So it's very hard to know. But what we do know is that the price action we're seeing at the moment, it's neither here nor there in terms of telling us whether the spot sell flows that we saw on the 12th of January were anomalous or something to expect for the days to come. That's why what we're looking at right now just may not be particularly indicative of market conditions because, again, those bloody ETFs aren't trading. So unusual to see non-24-hour markets after spending all this time in crypto. So nonetheless, I guess the short version of this video is, hey, it's a public holiday, just wait and see. If Coinbase keeps selling and spot keeps selling, we'll probably go down. If it was like an anomalous day and they just got a chunk of supply out of the way and, the bid picks up in the actual ETFs, then we'll be okay. That's realistically what the flows argument looks like, that you want the inflows to outweigh the urgency of any spot selling, be it from GBTC or not, but we simply can't know and simply can't measure that because, again, those products aren't trading at the moment. Maybe I should make this video on Tuesday or on Thursday or something, but it's Monday and we have a thumbnail for Monday Markets, so here we are. From a technical point of view, and again, that comes with a ton of caveats for the reasons I just outlined, there isn't a ton to be said on the very high timeframes, which is to say on the monthly and the weekly. The reason for that is the monthly is still mostly trading around the range midpoint, and this midpoint cluster around 44, 47. So that's in an area of resistance with 2 weeks left to go. If you're looking for monthly timeframe pullback entries, admittedly, there haven't been any for a while. The last one that I remember shilling and trading very imperfectly was the 20k pullback to this cluster. Since then, there haven't really been monthly pullbacks to support. Since that point, after going up, we essentially consolidated, then we broke out, and that's really been the story of the market. And so monthly pullbacks just haven't really been a thing. So this time frame, while the levels have been good, the specific entries have been more amenable to lower time frame trend following, more so than monthly pullback type of entries. Now, I have seen some arguments that now that we have the spot ETF, we're going to have either a dampening of volatility or we just won't go down because of all these passive inflows and so on and so forth. In my experience, those views could benefit from some, I guess, intellectual and epistemic humility, because for all the new products and new innovations and landscape shifting things that I've seen, be it going from inverse futures to linear futures, the Coinbase IPO, the CME futures being launched, the futures ETF, the spot ETF, DeFi, all of these things came with some sort of promise that either volatility would disappear or conveniently downside volatility would disappear, or we're going to have no reason to rotate out of BTC, so on and so forth. And on average, these claims just haven't been true. I don't think there's a ton of reason to believe that trading is going to materially change, at least in the short term. Now, in the medium to long term, you could make an argument for it. If there's significant adoption from like a portfolio conservative allocation point of view to Bitcoin, then I guess you could see some volatility dampening over time, but that is a very slow market effect and not something you'd expect to take place, the week after the ETFs go live. There's a whole legal process there and approvals and all sorts of reputational things post FTX, and I just don't think it's an immediate market force. So that's essentially the monthly time frame. The weekly time frame is quite interesting because if you look at the wick, it looks quite scary on its own. High to low, that's like 15%, which is a pretty sizable pullback. But realistically, in terms of weekly market structure, not a lot has changed yet. We're still very much trading in the Bitcoin spot ETF range that we had before the spike, which is to say, between 41.3K and roughly 44K, we're still just going sideways, ETF or not. So yes, the candle on its own and the displacement from the high is, doesn't look great. But in terms of the impact that's had on market structure, it really hasn't done anything scary quite yet. The daily time frame shows a similar view, which is to say that we had the daily range between 44K and 40 to 41K. We traded back inside the range, which is generally a bad sign, right? Sort of you break out of a range and trade back within it. Your target from a purely technical point is the midpoint, which we've reached, and the range low after that. Now, normally the argument would be, well, just look to do business at the extremes, sells at the range high until you're invalidated and buys around the range low. If someone is sloppy, that works both ways in general from an entry trigger point of view. You're kind of waiting for someone to get sloppy and, punt a bunch of delta at the highs that doesn't go anywhere, or a bunch of delta at the lows that doesn't go anywhere. Same with open interest, so on and so forth. The reason that argument needs the context mentioned at the start of the video is because if we get this type of spot flow, I don't think you're going to get particularly great entries at the range low unless it wicks significantly below and then trades back within. At the same time, if this was just like an anomalous candle, a kind of one-off, and those spot selling flows don't resume once trading goes live, and the market just kind of marches up to 40, 45K and just starts getting bid diagonally, then selling that resistance doesn't make much sense either. I think this is one of those junctures in the market where spot flows kind of override a purely technical view of the market, and given it's a public holiday, we simply don't have any view into what those spot flows might look like. I will say the only trade focus that I have for this week once these things start trading is that if we have some form of repeat of this move here, that essentially Coinbase starts getting hammered and everything gets dragged down as a result. The only area where I'd look to do business would be to some extent below these lows and sub 40K. I think that's a nice round number. It comes in a bit below the range low, and if someone really gets sloppy selling there, like if spot starts to sell us through and then perps get really aggressive and you see a bunch of leveraged shorts enter, and if they start doing business at bad prices and the market sort of starts trading back within the range or doesn't go any lower, even though the aggression by the shorts increases, I think there could be some sort of short-term reversion if that results in a move back inside the range, maybe to the midpoint, maybe to the high or whatever else. But that's really the only trade focus that I have if we see, it wouldn't be a one-to-one repeat of this, but basically if we have the same theme of spot selling when the ETFs are trading, then I don't want to get in the way of that in a fashion that's way too cavalier. I'd rather wait for the perp side to get sloppy with it and then look to step in there for a short to medium term trade. Bigger picture, if this is just the harbinger of doom candle and we just have a bunch of spot selling for the days and couple of weeks to come, then I'm not going to be looking to step in front of that for a while. If we just kind of, if this turns into one of those bearish range resolutions, which is to say that you've got a consolidation, you fake out at the high and then you break down for real at the low, that's one of the most sort of toppy, generically bearish resolutions to a range that you can get, and I don't want to be stepping in front of that too early. So if I were making this video on Tuesday or Thursday, I'd just be looking to see where Coinbase is trading relative to all the other venues and coming to inferences about that. Given I don't have transparency into that, the only thing I can do is speculate. I guess that's really the only thing I can do, full stop. But what that means from a sort of practical trading point of view, if we get a repeat to some extent, then I will look to see if the perps get unreasonably horny around or sub 40k. Otherwise, I'm not going to be looking to be the sacrificial lamb on the spot selling altar, and I'm not personally putting a lot of weight into this weekend price action, given the importance of the ETF flows and the importance of spot for the time being. That's really it. I don't think you'd be led too far astray if you purely took a technical view of this market and just looked at it from a consolidation point of view. But I think at this point, the flows are just really important, and I personally feel a little bit blind without them. We can look at what some of the weekend price action has looked like. Sort of post ETF in this consolidation. The market really hasn't done much, right? So this entire stretch of sideways here has just been marked by, long and short liquidations without the market moving anywhere. So this is what the crypto price action looks like. And understand, the same with open interest, essentially flatlining since the nuke. So price flatlining, open interest more or less stuck in the same range, and liquidations happening both ways as well. So understandably, the market doesn't want to express strong views without seeing how these ETFs trade and without seeing how spot is trading when the ETF's alive. And I essentially mirror that view as well. Fuck around and find out, I suppose, is the resolution there. On the ETH front, I think ETH BTC still looks reasonable on the weekly time frame. It's the first decent signal we've had in some time that the market has closed above 0.57. I wish the backdrop for this were slightly better, that BTC wasn't in this quasi precarious position, but nonetheless, this is meaningful for ETH. I think it's a nice weekly move. What I don't want to see, if it just starts to bleed out during the course of the next 1 or 2 weeks and just have no upside apart from this ETF week candle, I think that would start to look pretty bad. But I mean, for the time being, it looks mostly reasonable. There is a tough set of considerations to balance, which is to say that if you're going to be bullish ETH, you need Bitcoin to at least be bullish or sideways, and it can't be bearish, because I think past a certain threshold, if BTC really starts to pull back and correct, sort of if that range breaks down and things start to accelerate, then I personally don't think it's particularly likely that ETH can decouple completely and be up 5-10% if BTC is down 5-10%, for example. That doesn't seem super likely to me. I think ETH BTC strength is a good sign, but that ETH BTC strength and ETH USD strength as a result are contingent on BTC not pulling back massively. If it pulls back massively, I just don't think there's enough strength in the market to lift ETH on its own, while BTC, as it generally does, drags everything lower. So I think ETH bullishness is contingent on a moderate to strong BTC. And in order to come to a conclusion as to whether that's going to happen, we need to see what happens with Coinbase. Because if Coinbase sells as much as it sold on the 12th of January, I don't think being long ETH is a particularly pertinent idea. Those are really my views. I mean, altcoins have been reasonably fun to look at, and we saw a bit of a bounce in these. Solana was trying to catch up earlier, and then the whole Sui trade is still going on. There have been pockets here and there, but as always, my focus is still primarily on BTC and ETH, and it's hard to have any strong market views for the nth time. I've repeated myself in this video, but I mean, this is important. So if it looks like this, then I don't think the altcoin markets will benefit from that massively. Although one potential implication is that if we're, for the short to medium term, going to be so dominated by ETF trading hours and windows and the New York session and so on and so forth, maybe we'll get some reasonable organic crypto native price action in altcoins on the weekends in a kind of return to tradition move. That would be fun. And if it plays out that way, great. But at the moment, not a ton going on after this move. The final bit that I'll note, I mean, this is fairly self-evident. Other market indicators, quarterlies crept up a little bit, but they're still halved from the highs when they just got ramped up to 20%. So that basis trade got squashed, and this 9% on quarterlies isn't particularly frothy from a sort of premiums point of view. The other thing that I wanted to mention is if we look at TradFi, the basis on the CME is trading below the other venues from a premium. I mean, this might be slightly laggy data as far as I know. I'm not entirely sure, but it's no surprise, or shouldn't be a massive surprise to see that the premium on the CME has been unwound both after the ETF news, but also as a product of those ETFs now being available in the market. If you're just holding BTC via the CME, there's all sorts of, it's just much more expensive and less efficient. And these new products are much better. So I wouldn't strictly interpret this as an, oh, look, lol, they sold the news, now the CME is bearish. I'm sure part of it is that, but I think the more pertinent explanation is just the flows point of view, where if you want exposure to this instrument, there's now a very competitive market for it with BlackRock and VanEck and Fidelity and so on and so forth. So it's not hard to choose a venue that is cheaper than the CME if you want to speculate on BTC. So yeah, that's really all I've got. TLDR, let's see if Coinbase nukes us or gives us a break, and that's pretty much, I think the flows are just going to override the technicals, and that's what the market is waiting for. Weird time to do a video because the market isn't trading. It's a public holiday in the US, and so I guess stay tuned. The good news is we do publish a newsletter every Tuesday on trletter.com, so go subscribe to that. It's free, and I'm sure we'll have something to say. Or maybe it'll just turn into a massive nothing burger, but I guess we can comment on that as well, if it is the case. Hope you all had a wonderful weekend, and thank you to Woo for supporting the show. Their links are in the description. If you have any feedback or sort of product feature requests for the exchange, we have a direct link to the team. We can just ping them stuff. So leave that in the comments. Thank you for all the well wishes last week. I know I sounded like shit. I appreciate those of you who watched the video. That's all from me, and I'll see you later in the week.